Okay, so what kind of situation do we have at the moment on USD ZAR? Now, from a weekly perspective, we have a market that has created all this very huge impulse to the upside. And if you remember from our previous analysis on this pair, what did we say? We said specifically after this red candle here with a very long wick, we want to see the next candles fill in the wick and start the retracement, because that is how the market works: impulses and retracements. So we wanted to see the market make a nice drop to the downside to get some air after this huge explosion by taking our Fibonacci on the impulse. That is obviously what we have to do if we want information on the retracement. We can notice that now the market has actually reached the 0.382 Fibonacci retracement, which we have now marked here with this horizontal ray. So the first possible Fibonacci level has been now hit. Now, if you remember, we have been riding a short with students on a USD ZAR, following after the analysis that I published also here on a TradingView. For this nice short to the downside, we took our profit above the 0.382 just to be sure that the market would have actually hit our profit target for a nice 1 to 3 risk to reward to the downside. Now, how can we be looking for another opportunity to capitalize on this pair? That is exactly what we will be speaking about in this breakdown. So from a weekly perspective, which situation do we have? Now on the weekly, as we said before, the market created the impulse, and after this double top, the market started the retracement. Now in creating this retracement, the market also created new weekly structure. We have support here, and this support is now turn resistance at this area, and we would like to see the market go for a retracement back inside of the zone before continuing lower. Now from a daily perspective, which is the situation? We have a market that created this very nice impulse to the downside, and we would like to see a nice retracement before continuation to the downside. And most importantly, we need the retracement in order to be looking for another opportunity on USD ZAR, because looking for a short directly from the low of the market is obviously not a high probability situation. Therefore, we're not interested in it. Now go and see what is the situation from a COT perspective. So what hedge funds are doing at the moment on the USD, what we can see. So let's go and get our chart. Our order flow for the USD from a COT perspective, so commitment of traders. What we can see that hedge funds at the moment from a USD perspective have increased net positions from 7K to 17K, meaning that we have now a lot more longs than shorts. We have 24K long positions and 7.2K short positions. So a 77.9% long exposure and 22.9% short exposure. So we can definitely expect the USD to try to get stronger in the near future, so giving us a retracement on the USD ZAR. But as usual, guys, trading is reactive, not predictive. We want to see ZAR continue to get stronger for this retracement, but if the USD will make it to gain strength and push this retracement to the upside, then we can be looking for possible shorting opportunities. If the market will just continue to melt, there is no way to be looking for shorts. So the way in which we will be approaching it is very simple. We have previous support to resistance here, both from a daily perspective, support, resistance, and also from a weekly perspective, as we have already seen. And if the market will manage to retrace back inside of this area, we will also have the confluence of the Fibonacci taken from the high to the low of the impulse, possibly a 50% or 0.618 Fibonacci retracement level in confluence with the structure resistance. And at that point, with students, we will be monitoring price action from a 4-hour perspective inside of this area, waiting for the market to shift from a bullish market to a bearish market, and for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for a nice move to the downside. First take profit will be this previous resistance, now turn support, the strong demand area given by this red candle here. Now, if you will be following this as well, and if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.